Hey everyone, welcome back. My name is Levi Woods. It is February 3rd. It is drawbridge finance. Wow, off to a good start. You can tell sometimes that I only type in the morning and then I get on the live stream. It's like the only thing I've talked to is my cat, who you can hear in the background, being absolutely bonkers right now. Atticus is ready to jump into the live stream anytime. I can see him over there rolling on the floor. I'm sure he's going to make an appearance at some point in time. Hope you guys are doing awesome. As always, nothing we talk about here is financial advice in any way, shape, or form. It's just what I'm looking at, what I'm doing. Absolutely getting, the market's getting kind of a pullback today. You know, some people might say this is a big pullback. I would say that this is like a normal sized pullback. We're going to take a look at the charts and we're going to get into what is happening in the market in general. If you have any questions, let me know. If somebody could let me know that my audio is working, that would be fantastic. I would love to hear from you, and just let me know where you're watching from. What else do you want to look at? If there's any stocks you want to look at, we're going to get into that, and I will pull up my usual chart of things. Okay. So let's get into it. I see there's 5 online already. There's no likes, so let me know. If you've got some likes, that's the easiest way to tell me that you love my content, is just to leave a like down below. I've got investing.com open. I've got Seeking Alpha open. Let's take a look at TradingView. We're going to start at the top with SPX. Market is down. The SPX is down 1.53%. So, you know, saying, you know, is this a larger than normal candle? We definitely have had bigger candles in the past. This is one of the bigger ones that we've seen in the last little while. We had a bigger one in October. We saw a larger one in November. So this is the biggest one since November, the biggest red candle. We're just looking at big red candles. This is on the daily chart on SPX. What is happening? You know, we're seeing, I don't have any lines drawn on this, but from a technical analysis perspective, this actually is kind of a slightly bearish setup. This is not great. This is called an ascending triangle we're looking at here. I think it's a little more clear if we look at it on NQ. We can see that I've drawn a few lines on here. So we've got this purple line, which is this bottom trend that we're seeing. So we've had 3 times we've hit this line. So that makes the bottom portion of our trend. Now there's a couple of places we could look. We've got a fairly flat line, this purple line here, that shows the points between this point that we had back in October and then this high that we had at the end of January. This is called the double top. So generally not a great setup for long-term investors. This is what is considered a bearish position, or a bearish indicator when we see a double top. There's this other potential technical analysis called an ascending triangle we're looking at, or an ascending wedge rather, where we see the stock being at a high, coming down, hitting a low, coming up, and then starting to form some action inside of this wedge. Typically, this is another bearish type of setup. So when we see this, it's when we've come in from the top and then we're bouncing through it. The question is, can we break down? Now, yesterday we saw this quite green candle, but there was a large trading range. So we've had days where there's large trading ranges, you know, in that 2% swing per day. But the candle was relatively high on the close. So we saw that it was closing and moving up into the upper portion of this triangle. And we've been kind of fighting this for a while. We've been talking about this. We're like, prior we had a triangle kind of coming down, and we didn't know, is it going to break up? And it did slightly, which was good. But now we're testing this level again, and the market in general is kind of coming down. If we break down, this particular technical analysis setup is not that great. Now, who knows? We don't know, right? This is, you know, there's a whole bunch of people that watch this kind of thing, and then there's people that don't. What we do know is that the point of control is this white line. It's around 25,583. That's about 250 points above where NQ is trading right now at 25,238. So even though this pullback has been 2.5%, it actually kind of split right across the point of control, which doesn't surprise us at all, or shouldn't surprise us. The other thing we can see is that there's a large amount of volume here, a pretty equal amount of volume that we're seeing down in this lower level. Let's scroll into a tighter time frame. Let's look at just the last 2 months, December and January, and let's look at what is happening. We can see it's a very, very, very tight range. A little bit of less volume in below here, which means that when we get these moves away from the point of control, then it becomes rather rapid moves. We see quite big or quick moves up and then moves down. We don't know what's going to happen, but this is not looking. Thank you, Frank, for letting me know that you can hear. Whether or not this is going to break down or not, really, really tough to say. On the Russell, I think this one is a little more clear. I mean, obviously, there's a lot of stuff going on in the States, but we're definitely an uptrend. We're definitely well above our VWAP, and this to me is a bearish indicator. Like, I think we're going to see some move to the downside. We'd have to look at IWM to see where the volume is, but to me, I think Russell is going to come down, and I've been saying that since just slightly before this purple short signal came in. So we saw this form. We're now below that level, just barely. So that is what we're looking at today, down 1.25%. Dow Jones definitely on an uptrend. This is, it's a small list of stocks, high quality stocks. This again, I would want short deltas in those positions. VIX is coming up nice and strong. We're at this level right now, 19.56. This all has to do with the whether or not the government is going to continue to be locked out or not. US dollar is rising though. So if we look at that, US dollar is actually rising over the last couple of days. So I think that's a good indicator personally. Look at oil, where we saw this large move up and now it's kind of retracing. Lots of volume here. I would expect some sideways movement. I would be slightly short delta on oil positions, and I wouldn't be entering long positions until I was under that 60 level, which we could see completely. Gold having some very whippy action. And this is what happens at extremes. So when we see a stock that it pushes up outside of its typical trading range, when there are pullbacks, they're rather extreme. They pull back down. And so then we see that's choppy price action again. Gold has been very bullish for a very long time. So this is like a normalized price action when we're at the top of the range. But when it starts to get extreme and we start to see that pulling up and up and up, we should be not surprised at all when it pulls back into the range. So whether or not we're right now, we're technically today, we're sitting just slightly above and out of it. So we're again on that high side. This is where, even if gold continues to run, there is more likelihood that there will be high move days where it moves up and down quite a bit. And the same with silver. When we look at silver, we can see where this candle brought the action. So as this range was coming up, we can see this blue line increasing, VWAP way down here where the point of control is, around $50, and silver trading at $82 right now. When silver was trading at 115, VWAP was still here, point of control was still here. So these large candles shouldn't surprise anybody when we see a 33% pullback in a single day. That is normal because we're pulling back into range. Very hard to play these positions when they move out. Let's look at some stocks and just kind of go through. And if you have any specific ones, hi Kevin, thanks for joining. Always good to see you. Let's look at some particular stocks and say, what is happening. We've had a few earnings release already, like Apple already had its earnings release. We saw the market move up. And again, I have these signals on here. This is an automated signal that shows us where, from a Bollinger Band strategy selection, where we might have wanted to go long with Apple. Well, here it was. And then we went, you would get out of that position. Now, in the case of Apple, when we see this, I already had positions on an Apple. But when we started to get way down here, my patrons know that, or my Drawbridge Trader Club members know that I put on a trade way down here, just a very simple bull spread. And I took it off this morning. And what was the return? Like 150% return on capital, on risk capital. It's crazy. And this is because we're looking at the range and we're seeing that there's potential when these stocks are down, and when we've already received a long signal prior. When it goes down even further, there's often opportunity for a move to the upside. Shop is down sharply. Yeah, let's take a look at Shop. TTD. Now I have a long position on this, and again, I have, it's sometimes hard to hold these. People ask me about like, why am I adjusting? Why am I not adjusting? Well, there's a long signal back here. I think that TTD, hardest ticker for me to say, is going to be higher. I think we're down in the bottom. We're in the slump down here. Could it go further? Absolutely. They can always go further, but I'm holding long deltas in this position right now. Whereas AMD, I'm actually capped. I can't make any more money above 230. That's kind of my max range. AMD could go to the moon. That doesn't help me anymore. 230 is the max. Whereas I have a nice little range between that 185 and 230. This is where I would like the stock to, the stock to settle out. That would be very nice. Anywhere in there, really anywhere above this, around that 195 mark. So that's how I play with these, because here's the point of control, 161. Now, of course, we've had some major events happen like this. This gap that we see was huge, and it's unlikely to be filled unless AMD has terrible earnings tonight. But my expectation is you'll see no volume once this recorrects here. So you see this point of control around 217. That's kind of in the mid-range of where I'm looking, from that 230 to 195. So it's right in the center. And so I use a bunch of these different tools to take a look at those. Let's look at ARK. I think there's opportunity here. We're seeing the long-term trend line that I've kind of drawn on here. We've got some channels. This is where ARK used to trade, in this blue. Why do I have everything is blue all the time? I am not sure. Makes it really hard, doesn't it? Let's just change this. Let's just change this to like red. Let's change that to a red line. Now, this, I don't know if you guys remember, because this is now going back a long ways. Okay, why is this not? Why can't I select this? I got too many lines on here. What is going on? Okay, I have it selected. I just want to turn that one red. Okay, this channel goes back a very long time. Okay, and so for those of you who've been watching for a very long time, you guys know that this is where ARK used to trade, in this slightly rising channel. And what would happen is, if it dipped down to the bottom and touched this, I would go long. And then if it got to the top, I would get out. And for the longest time now, so if we go back, if we kind of zoom out, I just keep these on here. This is kind of how I like to function. When I have a long-term trend like this, and I think that ARK is, their goal is only to make 15% a year. That's what they want to give to their shareholders. And in the last year, they've done very well. From March to now, they're up quite a bit. But they're actually inside of that channel. And so what I want to do is I want to make sure that I am not getting too greedy when I take positions. So I will often take a position when we're down here, like in March or April, and I'll ride it up. But if it hits the top of this channel, I just don't take the trade. And my expectation is that at some point in time, it's going to come back into this channel. And that's what we're starting to see now, finally. Now, of course, a new channel could form, right? But if this breaks down, and which it could, we're here, we're right at the point of control. And again, there's not a lot of volume. When we look at this volume, there wasn't much trading in this area. There's been much more trading above. So if there is a move, it could be rather rapid. If it gets down here to this red line, that's when I'll go long again. I don't typically short these because our cake could go up a huge amount. So I don't want to get hurt if the market goes up, but I definitely don't want to hold long positions when it's well outside of the range. So that's kind of how I'm looking at things like that. Now, Adobe is unfortunately just breaking down. Now, you would think that at some point it would find some buyers, but it really hasn't. So we're at a level, like, look, we have to go back. The last time it was this price was in September of 2022, which 2022 was already a bad year. It went from November of 21 down to September of 22. That was like the bottom of 2022. And that's where we are now. So interesting. So I would like to have a small long delta position in Adobe. That's kind of where I would like to be. Now, if we look at Amazon, we're above, we're in the upper portion. Now, again, these trade in a range. And like this is a pretty directional. These are pretty directional trades. This goes up and up and up. And there, if you look at previous events, like where you know, this kind of dumpling top shape, it takes a while for Amazon to break out of these typically. So if we ignore these extreme moves, which we try to avoid anyways, if this starts to trade sideways, it should trade sideways before it trades down. So this, the long-term trend is good with Amazon. But again, playing appropriate positions. Chewy, we got a long signal at 3 days ago on this move to the downside, and I think this is oversold. Personally, I think we're going to go back up, but you know, another bad day today, down 6.5%. Let's jump down to Shopify, and then we'll talk about that, and then we'll hopefully get into some specific questions. And I don't have Shopify on this list. Let's rectify that. I kind of stopped trading Shopify because it was too expensive. You know, I didn't love trading it, and now its price is much cheaper since the split, which was now a while ago. But you know, that just shows, you know, we're traders for such a long time. Like, when was the split here? I don't even know. There it was. It feels like just yesterday, but it was already 4 years ago. So Shopify down 10%, but again, it's trading. If we zoom in, we're trading inside of its typical range. This is definitely not, I'm scrolling the wrong way, my apologies. Let's get this centered up here, and then we'll take a look at this action. So here is VWAP right here. This is the volume weighted average price. That's this center blue line. Here's point of control, 137. We're trading at 119. That's a big drop, but the range is still from here, 190 down to under 100. So it definitely has a place to go. We haven't seen any long signals. These long signals appear when they're outside of the Bollinger Band. We should be right now. So this is very much a potential where we could get a long signal. We also have earnings coming up. Let's take a look at a potential trade idea in Shopify and see what we can do. So I'm going to pop over to Moomoo. We'll look at Shopify. And it's $111 stock or $119 stock. So from a short put position, we're talking about a position that's worth $12,000. How do I get that? How do I get that number? Well, what if we were to buy 100 shares of stock? That's kind of my basis. So what would it cost? 100 shares would cost $11,922. Well, if we go to the options contract on this, we've got 3 days out. What if we were to sell some options below? What if we were to sell a short put at the 114 level? This would actually collect quite a bit of money. This is more than 1% for 3 days. So it just shows you how much risk the market is placing into the current market environment. The mid price, the likely mid price is around 176 on this. So this is going to be $176 credit, which means the max profit's $176. Max loss is going to be $11,220. So that gives us a break even of 112.185. Sorry, 112.18. We can see that here. We can see Shopify's trading at 119. So then we go back to that chart and we look at this and we say, okay, well, what if? You know, people talk about gap fills. Well, there was a gap right here. This was, let's mark some lines on here because this chart doesn't have any lines on it. So let's mark a horizontal line. If anybody from Moomoo is watching, I would love to know how to do a hotkey for the horizontal line. That would be so fantastic. There's the gap. So this gap was on earnings. So we had an earnings report and there was a gap. And then we've had another earnings since then, and it hadn't filled that gap. And but today, just today, finally, that gap is filled. And we're seeing this previous level right here be potential support. Where is that 114 level? Well, here's the 114 level down here. So might this be a good place? Let's put another line here and we're going to change the color on this one. We're going to look at, so that blue lines of the gap, we're going to go to 114. This is probably why all of my lines are blue, because that's how that works. We're going to change this color to red. So red means that if we're under under the red line, then that short would be a losing trade. And if we're above it, then it could be a winning trade, which is pretty awesome. Now, what happens if Shopify continues down a little bit further but doesn't break that line? Well, there's an easy setup that I like to do. So in this case, we have a max profit of 180 bucks, right? This is how much we would collect for a short put. So what I typically do with a setup like this, especially if I'm doing short duration, I will just move up the short strikes a little bit. So let's go up to 116 so instead of 114. And then what I'm going to do is I'm going to buy a spread in here. And so I'm going to sell two at the 116 and I'm going to buy one at the 118. What this does is it creates a profit curve, a ratio spread. This actually has a lower break even. It's a lower break even. The entry price is bigger. This ratio spread outperforms that selling that 114 put right out of the gate. The credit collected is 193 instead of 180. So you're getting another 10 bucks extra for putting on this trade. The break even is lower. So 112.25 instead of what it was for selling the 114, it was it was right around the same, 112.25. It was right around the same because we're going to collect $180. This is collecting $190. But look at this profit 10. Now we have a potential of making $374. This is like double. There's double the potential, same probability of profit. Ratio spreads are almost always better trades than a short put. And I see so many people looking at it that are selling short puts for a living and they're not, paying attention to the fact that they can do a setup like this. It's important to exit it if it comes into play. If the stock is close to this 118 at expiration and there's a chance that the 118, which is long, could go in the money, we just close the trades. We just close all of these. We buy back the 116 puts and we sell the 118. We take off the risk. We close the trade. That's what happens. If it goes into the tent, we wait as close as we can to expiration. And it doesn't matter which side it's on. Like if the stock is down here, like look at if the stock is at 114, let's go right to 114. Current P&L. If we went to 114, the other position would make 180 bucks, right? Well, look at this expiration P&L, 180 bucks. It's the same. You make the exact same amount of money on this slope to the downside. But the bonus is that you make more money if it trades between 114 and 118. That's a $4 range, which is pretty big. The stock dropped $13 today. So could it go way further down? Absolutely. So we have to know that we want to buy the stock if it goes down further. So that's the cash secured version of this. Now, can we up the ante a little bit more? Sure. One of the things I like to do is to do 3 of these. So now I'm on the hook for 200 shares. You can see my max loss. As soon as I do that, now I've got 22,000 in max loss. Before I only had 11,000. That's double the capital because I'm selling another naked put. I have 1 long put and I have 3 short. That gives me net 2 short. So what I do with this is then I add another long put down here and I try not to pay too much for it. I just buy like a cheapie, buy 50 bucks. Now I'm getting 387 for this. My max loss is still 12.11. So that's my break even. That becomes my break even. If I get assigned on that, 12.11 is the max loss that I go if it goes to 0. Now, can I lose a little bit more? I can actually. This is like not a great trade. The slope is a little bit worse if we were to say drop to like 105. It's a little bit steeper in here, but to the upside, it's awesome. Now I've got $12,000 in risk. My max profit is now 587. I have a slightly lower probability of profit. My break even is a little bit higher at 113. That's why the probability of profit is smaller. So pop was 74%, now it's 70%. Break even's now 113.06. But the max loss is the same. Max profit is now 587. I have way more potential setting these up. This is called the 131 trade. You guys can do a screenshot of that and you can study it later. That's what we're looking at for that type of trade. Now, is there other trades? What if you're like, holy Levi, that's crazy. I don't have enough money for that. Well, simply we can just butterfly this off. This trade still has a max profit of $541. This has a probability of profit of 68%, has a max loss of $16.59, still collects $341. Butterflies are extremely good trades. Since we're buying this cheap put, we can even give ourselves like ridiculous, really flat deltas if we want by really, bumping up now we've got a max profit of $8,000. So if there was a huge sell-off and the stock just plummeted over the next 3 days, which is next to impossible, but if it did, if there was some astronomical sell-off, then by adding more long puts to this equation, we're giving ourselves, upside potential. We don't want to cut it cuts into our cost, right? So our credit to enter. Okay, we're going to look at Palantir. We're going to look at CLS. So let's take a look at both of those. And the other thing I should do before we get off of Shopify, because I like to just do thorough analysis here of everything we talk about. So let's look at Shopify. Fair value 132. So this is a paid metric. You can't just go to investing.com. This is an Investing Pro subscription. I have links to discounts. So if you are considering signing up, make sure you use a discount code like mine or some other YouTubers so that you get a discount. We get a kickback, but you get a deeper discount than you can get by just going to the website. So it's always smart. Be smart. Trade, use people's links. If people are promoting a product, it's because the products are asking us to promote them. And you can see the ones that I use. I don't promote products that I don't use. So the Shopify on here, valuation is actually not that good. So we have two kind of slightly conflicting analysis here. We've got Investing Pro saying that it's undervalued by about 11. And then we can see that Seeking Alpha is saying it's overvalued right now. But it's a profitable company. It's definitely in a place where we could see more downside because the whole market could come down, but where there's likely more upside potential, in my opinion. And again, that's just my opinion. You have to do your own due diligence, do as much research as you need to do. I don't make investment advice on anything here. So what were we going to look at? We're going to look at Palantir. Now, Palantir, unfortunately, is still way overvalued. So from this fair value metric, I tried putting this short. I tried to trust that this is going to come down eventually. The performance have been fantastic. It has just been massively outperforming, but it doesn't mean that it's a good time to buy from a value perspective. So Palantir has been in an upper range for a very, very long time. And you can see that both Seeking Alpha and investing.com think that it is overvalued. So although it's quite profitable, and it has had, like you see, we can see these metrics, profitability health is a 4, but the value is not there, and the value is not there. So these are hard to justify as a long-term hold because they're potentially overvalued. Doesn't mean that we can't play them as a stock though. So let's take a look before we get out of this, let's just zip over to Trading View again. We'll take a look at Palantir and where's my Palantir? 156, we're up 6% today. And so we're right at that VWAP, which is not a bad place to be at all. So we're right in this range. And again, this is what I was saying about, even though it is calculated as overvalued, it trades in a very nice range typically. So if you guys have been following me, 10 years ago, I still used less sophisticated charting platforms on here. And I would just use like a simple moving average instead of the VWAP. And I think the VWAP is much better indicator, but it's very similar. So the question becomes, when is an opportunity to go long Palantir? How do we make money from a long perspective, just from stock buying perspective? Well, really, we don't want to buy unless this is trading under this line. So this is finally, today is still under. We've had 3 or 4 days where it's been under that line. Doesn't mean that it can't continue down further. It's just that it has been an incredibly long time since it has been back down under that line at all. And you can see the stock has had massive growth. So when we see things that are massive growth, there's quite a bit of potential to the downside. Is there going to be some support along the way? Potentially, it definitely could. That 183 or that 83 valuation, interestingly enough, that investing.com is talking about, shows right there at that point of control, that white line that keeps adjusting. So there was a ton of buying back here, and everything up here has been profitable. So how do we play these? Well, let's take a look again. So if I was looking at this and I wanted to put on a trade, I'll go to Moomoo here, and we'll look at Palantir, and we'll look at the options chain. And do we have, I'm just going to close this for a second to see if we have any earnings. Now, earnings get flagged right in here, so they'll show as a line. So we don't see anything coming up. Probably don't want to trade something as close as the 3-day on this, but let's look out for next week. We can collect 145 on, $210 for the 145. I'm just looking, when I grab these, it's not super random. I don't like to collect when I'm selling short. I don't like to collect less than 1%. That's what I want to get. So if I look down this screen, from selling a short put, if I am selling the 139 and I'm only collecting $1.12, that's less. It's not enough. The 140, 125, not enough. 140, 138, not enough. 142, 154. That one, that's the one that I get that's the minimum one I would sell. So if I was selling a short put, from a dollar perspective, I don't want to sell less than 1% based on the strike price. So in this one, I'm collecting quite a bit. I'm an aggressive trade. So let's close this. Let's look at the curve. If we were to do this, we understand there's a short put. So we've got all this risk, max loss 14,000, 79% probability of profit, max profits 216. This is like 10 days away. So it's very nice, a lucrative annualized return. It's positive theta. It's short vega. So there's downside risk, there's volatility risk. It's going to have some gamma come into play, but not for a little while. Theta decay is probably overstated by quite a bit, because the maximum I can make is $216. This is showing a theta of $23 a day. This is what, a 10-day trade, something like that. What are we at? Yeah, 10 days. So 10 days to the 13th. That's showing that it's basically going to get that much decay every single day, but it'll have less decay per day, and then there'll be quite a bit of decay on the last day. From a delta perspective, we're 21 delta. So this long delta, which means it's a bullish trade and it makes money if the stock goes up. We can see that because there's risk to the downside. There's no risk at all to the upside. Now, I don't love to play trades like this. It's not my favorite, because when the market sells off, and the market sells off pretty heavily, we're losing money quite a bit. It's skewed delta. So for every $1 move, if this is a positive $20 delta, or a positive 20 delta, if the stock moves up $1, this trade makes 20 cents. If it moves down $1, it loses 80 cents. So it's not very neutral. What I can do is I can make this into some sort of diagonal. I can build a ratio on this as well, but these are, again, expensive stocks. If somebody wants to hold $15,000 in Palantir, or 100 shares, they have to have a $300,000 portfolio to have under 5%. So it's a big number. So what if we just went out to the 24-day and we bought a little spread here? This is going to cost us $50. Let's look at the curve. This is a much gentler trade, so to speak. It's still got a ton of potential, and the diagonals function in kind of a way that's difficult to predict, we're going to say. The IV changes it, the gamma changes it quite a bit. The velocity of the move near expiration can change this quite a bit because of the IV expansion that could occur. But there's some things that we can just look at. We can just see it. So the price right now is like 59 cents. So we know that that's the max risk to the upside. What happens if Palantir just goes to $200? Well, these are both puts. So we know that on February 13th, this 145 put that's short is going to expire. And if the stock's trading at $200, this February 27th 140 put is probably not going to have any value, because it's going to be $60 out of the money. And it's long. So it doesn't matter if it's long or short, it's just not going to have any value. So if the stock goes to $200, I'm out of pocket whatever I pay for this. So for this reason, I don't want to pay very much. In this case, 59 cents doesn't seem like very much at all. This is partially because we're already in a heightened IV environment. So so we know it shows here max loss is 59.79, but the max loss to the upside is only 59 bucks. So it's very, very low risk to the upside, and we have greater risk to the downside. So similar to that short put, but there's a lot of potential here in the middle. So what happens if the stock trades in that like 138 range to 163? That's where the break-evens are theoretically. Now these can move. They can move together. If the IV drops, it can actually become a losing trade if the IV was to drop. Now, if the stock moves down, it's pretty unlikely the IV is going to drop. The IV is going to probably expand a little bit. So if the IV expands, you're going to see that this break even. Let's just look right here at this portion of the trade, and let's reset this back to now. So break even's 138.89. If the break even, or if the IV expands considerably, then that break even moves over a little. Now, if the stock moves up, the IV is likely going to shrink. So now we're looking at that upper break even. If the IV shrinks, that break even is going to get closer and closer and closer, and this could become a losing trade to the upside. So with diagonals, what you actually want is you want IV to expand. That is the key metric. But you also want it to be trading close to this center point. So this is where we look and say, from a chart perspective, does this make sense that it would trade near the 145? Let's go to the chart. Let's take a look. Where's that 145? And we can mark that on here. We can just go to the horizontal line. I'm already in that mode, and we can just mark 145. So there it is. This is definitely looking quite good for that range. You know, there's a point here. There's previous resistance. So we have support. We have resistance, and which became support. This almost touched it. We saw it support again, and then we saw support a third time. Now, 3 times, not really great. If we keep testing it, it could break through that. But this is where I would put, consider these trades. So 145, that's like the sweet spot. That's where I want it to be. This could be a nice little trade. Upside risk above that 163 level, 163, something like that. Basically above, just like, was it 163? 164. So basically, if it goes up, I have the chance of losing a little bit of money, up to 60 bucks. But I have a chance of making quite a bit of money if it pulls back a little. So depending on what we have in our account, these could be good trades. Now, what I like to do is I like to blend these with other trades. So I can look at this and I can say, well, I can put this trade on, but then I can also go back to the table and I can say, well, I have that trade that's going to make nice money if it goes to 145, and I'm going to now go to the sorry, I was seeing things there. I'm going to go back to February 13th, with just 10 days away, and this is where I might add a short put. So for those bigger accounts, I might say, well, here in this case, I want to collect around that 1% over the next 10 days, and I might sell the 141. What is that going to do to our curve? Look at this, 85% chance of making money. A highly probabilistic trade. What's the risk? The max loss is 14,000. It's basically the same as, so if I have a $300,000 account, this is the type of trade that I can put on. Max profit is now 494. So we're seeing what happened. We did that other trade, which was the Shopify one that we looked at. It ended up being a little ratio spread, and this was a 131. This is very, very similar, but it's the same sort of mechanics. In this, we're doing there's 2 short on the same expiration. There's 1 long, and that's it. Now, if I want to change this parameter, all I have to do, say I want to reduce this risk again, this max loss. If I want to reduce that, all I have to do is buy another short put. So what does this one do? Oh, I clicked delete. I clicked delete instead of adding. Let's go back to that. That was we were looking at the 24 days, and we were looking at the 140, right? So that's what I had on there before. Let's go back to the curve and take a look. Yeah, this is what we had. So I wasn't meaning to hit delete, I was meaning to hit plus. What if I bought a second 140 put? Now, what's this going to cost me? The credit right now to enter is 89 cents. The credit. This is going to cost me an additional $284. So this is going to make this trade a debit as soon as we do that. We're going to go to the curve, and I'm going to click on the plus button, not the delete button. And this is going to mean that this is a debit of about 200 bucks to enter. So that we have some upside risk again. How much can we risk? Well, now we have more upside risk because we're paying a debit of $200. So there's a little more risk here. But we have this huge profit 10, the 135. So, here's the 135 break even. And we can kind of zoom out and look at that. What does it look like? Well, there's a chunk of change to be made here. Then let's just do this. Let's just, for fun, we'll make it that 131, but this is with the diagonal portion. So I'm going to sell. So right now we've got 2 and 2, right? The max loss is it's $830. So I'm going to sell another one of these. I'm going to sell it at that lower level. Now we got a break even of 171. So this is what I'm doing. I'm playing with these. There's a whole bunch of different parameters in here, but when we focus on the trade, what we need to know is how many are we selling. So in this case, there's 3, and how many are we buying? There's 2. So that is what becomes important. As soon as we have more short than long, we have this 100 long stock position. So this trade is appropriate for a $300,000 account. This trade is appropriate for a much smaller account. This could be in a $100,000 account because the max loss is $830. This in a $100,000 account, that the worst can lose 0.83% of an account valuation. Has a massive profit 10 to the downside. Of course, we can move these around and kind of isolate them a little bit more, but fun ways to set up potential trade ideas. Okay, then we're going to take a look at CLS. So we'll go back over. I'm going to start over here. It's 11:42. This is perfect. Hope you guys are enjoying this. Let me know in the chat if you're enjoying this. If just say yes or something. Just chat something so that I have a chat metric going on. I feel like I'm begging sometimes for people to just say, yeah, thanks, Levi. This is great. Quant rating is a strong buy for CLS, which is great. Thank you. Thanks, Brian. Appreciate it. Quant rating is strong by 4.77. That's amazing. This is a very strong rating for Seeking Alpha. Valuation's only a C+, but a great growth, B+ or a B for profitability, great momentum. So just nice little trade. Seeking Alpha, their quant rating very much favors momentum. So if you're like a trend trader and you're like looking for indicators that help identify trends, Seeking Alpha, definitely the momentum is one of the things that it likes. Fair value. So this valuation is a C+. This one's showing a 25% downside. So we're currently trading up just 65 cents today at 285, fair value at 213. It's had good performance. Its profitability health is good. So we see that B, we see that here, B, the growth health is good. And we can see that in that growth. A, we see a high rating here. Cash flow health is not that great. So price momentum is there, but this momentum is giving us an A. Investing.com is giving it only a 3. Both of them don't have like a super strong relative value saying, oh yeah, buy. So how do we play these? Let's look at a setup. So we're going to go to Moomoo. Actually, we're going to pull it up and look at it on TradingView just so we can see the what are we going to look at? We're going to look at the volume. I don't trade CLS very often. So it's thank you for bringing it up. It is definitely one of those stocks. Okay, so here we are. So my immediate thought on this is, here's the VWAP. We look at that line. So that is the volume weighted average price. We see the point of control down at $89. If we go back in this time frame, back to December of 2024. So if we look back in the last year and a half, that might not be relevant at this point in time. We do see a gap here that has not been filled. Got close, but it actually never did get filled here from at the 219 level and then that 226 level. And what was the price we were looking at on 213? So there's a gap there, and so we can see that small gap. I know it's hard on the screen there, but there's this small gap that has not been filled. But it's been trading in its range. This is like a normalized action, and you can see these long signals that appear. Long here was profitable, short. We did the Bollinger Band strategy didn't buy when it was outside of the upper range. Then it bought, it signaled to buy here. It got very, very close to signaling a short there. If it had, there would have been another buy when it broke here, and then, but eventually it sold. So when we get close, you know, sometimes it's better to just take those profits a little bit early, because this can be a very frequent thing that we see where you can actually get 2 trades out of 1. In this case, if you had just been playing the Bollinger Bands, you would have had 1, you would have been in here, out, in here, out, in again, and out. You would have had 3 trades since November 19th if you played Bollinger Band. Now, we're not quite there. We haven't quite broken through. So it could rebound, but it could go lower. So what we do is we look at this range. It's trading sideways. It's definitely in a neutral strategy. There's very, very tight trading in the short duration. I'm going to zoom out just a little bit more. I'm going to look at the point of control to see how much volume there is. And the volume seems to be right here in the middle. If we do get a breakdown, there's not a lot of volume below trading this level. So it could move down to this node around that 250 level. Trading right now below 300 at 286, and that point of control being at 304. So these levels, 250, 200, and 300 being quite big levels where people are buying or selling. How do we set that up? Let's take a look. It's probably going to be some sort of diagonal again. So I'm going to go to Moomoo. I'm going to go to CLS. And again, this becomes a game of when are earnings. So first things I need to do, because we're in earnings season right now, I need to look, are there earnings coming up? If you guys see earnings somewhere else, could you let me know in the chat? Because that changes these trades dramatically. I would usually double confirm with another platform and say, okay, well, there's earnings coming up. What can I do? So again, I'm going to look for that 1%, around the 1% based on the strike value. So $1 here compared to 242. Nope, that's not right. $2, 247. No, that's too low. $3 compared to 250. There we go. So right at that 250, there's a level. And we know that if it moves down, that could work out very well. So this is where, like, selling a short put 10 days out, there has to be earnings here. I feel like that premium's way too big for CLS to have no earnings there. But let's look at the curve. If we were just selling the short put, $24,000. So this requires a $500,000 account to sell one naked put in here, or cash secured put. So these are big trades. We can instantly reduce that by just going out in February to a later date, to the 27th, and we buy a shorter put. Now I'm collecting $4.30 mid price for selling the put. The spreads are pretty wide in this. We might not get that. So if I want no upside risk, I just spend less than I purchase or than I'm selling. That's as simple as it is. So if I buy the 220, I'm going to be getting a credit for this. These are both puts. If the market goes up, they both expire, and I'm left making or keeping the $110 that I received today. So when we look at that curve, this is a very, very good setup. You know, CLS goes up. This trade makes $100 at expiration over the next 10 days. If the stock trades down, 250 is the sweet spot. Break even's at 241. Max loss is 29.19. So we've got $2,900 in capital. This is still a big trade. This could, go to 0. So if this was a 0 and we want to limit per trade to 1% of an account, this trade requires a $300,000 account. A $300,000 account gets one of these diagonals. If I wanted to do this in a $100,000 account, I would need to reduce this max loss to $1,000. How would I do that? Well, this is where I would buy the put closer. Right now, this is a 30-point spread, and you can see we have almost $3,000 in risk on. So if I slide this closer, then this is going to reduce the overall risk. This is now from 230 to 250 is $2,000. And look at that, my max loss is 2,000. So playing tighter spreads. The other thing is this looks like it's growing. Now, expiration P&L on this is 827. Let's just go to where this was before. We had a 220, right? So this was actually 618. So this is theoretically a bigger return with less risk. But we're adding upside risk by doing this. As I move this over to the 230, let's go to 235, has the potential of making 800 bucks. But this is also costing 90 cents to open. So now I have $90 in upside risk. So we didn't see that because we're zoomed in so far here, but we have potential of upside because we're paying a debit to open this. We want to pay small debits. So, but this is typically how I do this. I don't sell a lot of calendars. Like, this is the cheapest, biggest risk reward there is, but typically the theta decay is not that great. So in this case, it's between 220 and 288. This is a very nice tent. It's great. They can work very well, but I typically like to make mine a little asymmetrical and just like bump it over. I like trades like this, where I have a max profit of $1,000. I've got a max loss of 843. I've got a 50% probability of making money. This is similar to, this is like offsetting buying stock. So, and again, I can play this with different types of setups, so I can get as crazy as I want. But this is kind of the basics of what I want to do. I want to have a small debit to open. See, this is $310. If I bought the calendar, this is actually 430 bucks. So people don't realize, they're like, oh, this is better. There's better risk to reward. Like, there's smaller risk on both sides. But what happens if the stock goes to 390? Like, this trade loses $423. So I need a $50,000 account to trade this trade. If I move this over, then, and we go to that 400 level again, sorry. Yeah, if we go to the 400 level, I'm trying to find it here. 400 level, this trade is down $200. So half the amount of upside risk by taking more downside risk. Still a lot of potential. So I typically have them like a little bit, like on a 250, I'd probably go 10 points wide. And again, it depends on how big your account is, because you are increasing the max loss. So something like this, max profit of 831, max loss of 1626, the break even's 306 over the next 10 days. Nice little trade. It's got a profit 10 to the downside. Okay, CRDO, let's take a look at that. And then CRDO, hope everybody's doing well this week. So we're gonna look at Credo Technology, fair values at 101, currently trading at 106. It's only 3.8% below. And so that's a nice little, those are nice levels to consider going long. Yeah, it's coming down here and we've got a strong buy rating here on Seeking Alpha. So on this type of thing, this is where I look at this and I go, it's a $10,000 position in a $200,000 minimum account. This is where I would consider just selling a short put on something like this, especially when it's close to this value. Fair value is 101. We're trading at 106. If there's no income, if there's no earnings coming up, or even sometimes when there is earnings, it's like you just play that. And let's just type in CRDO. We'll get this up here, Credo Technology, and we'll just take a look. Yeah, this is definitely similar to that Bollinger Band strategy. Again, if we just look at when the candles just touch here, that would have been a buy and then sell. Buy, well, it would have actually been a buy here. First time it hit, then it would have gone up, then it would come down, would still be in the trade, and then it would have been a sell. Down, down, down. This would have been a buy. And then look at that Bollinger Band compressed, it would have been a sell. This, depending, you might have already gone long here, depending on how aggressive you're being with the buying, but definitely this is like a long signal. I mean, this is like, it's below VWAP. We have strong ratings on 2 different paid services. These are like excellent types of trades that I'm looking for when I want to just get long. And what I might do with something like this is even go even crazier. I might go to the options. I might go to, let's say I go 10 days out to give myself some premium. I might go really aggressive, sell the 540, and then buy some spreads above, or maybe buy a butterfly. Maybe let's just buy a spread. So we know what this curve looks like. So we've got $9,000, $9,900 risk to the downside, probability of profit of 66%. This is perfect. This is like exactly what I want. It's a down day, 10%,
right hitting the Bollinger. We've got multiple confirmations saying we should be long. And again, this is not investment advice, but this is the type of setup that I look for. So on the shorts, what I would like to do is spend some of this money. I'm collecting $6. So my maximum profit on this is $6. If I can buy a couple of spreads and see whether I would look here at the volume. This is volume 179, 130. Can I afford to buy a spread there? Buy and then sell. The reason I want to do it as a spread is because I don't want to give away all my profits. If I just buy it as if I just buy the call, which is fine, I give myself a massive opportunity to the upside. If Credo goes, to 150, all of a sudden I made $4,500. Like a 50% return on capital. But what if it doesn't? What if it just stays where it is over the next 10 days? What if it stays between 105 and 115? And if it does that, if we look at the chart, 105 and 115, I don't know why I would cap myself. I mean, that's what I would look at. This trade, and again, I was going to say put on the sell or buy a spread here. So cap it, so you get $200 back. This gives me $400.50 credit, which is like a 2% return. And then I have this like bonus, I'm making $1,000 on it, but this stock could just rocket back up. Yeah, so I would expect 130 for CRDO is what Brian is saying. And and I don't want to cap my profits too much. So this is where from a perspective of looking at the chart, I would probably want to take the risk on this, and I would just want to sell a put, collect my $600 for the just slightly out of the money put, and then buy that 115 call, knowing that I have just a ton of potential on here. If I really wanted, I guess I could go up to like the 130 and see if there's some value there. And there is. I mean, I get $80, $100 here. Maybe that's the thing. So this gives me $300 credit to open. And then that curve, if the stock drops to 101, I'm buying it. And I have the potential of making $1,800 on this trade. So that is pretty great. I like this trade. I like this trade quite a bit. I might do a little bit more analysis on it in my chat room before I put this on, but overall, I like this trade quite a bit. So I'm going to take that. And then it is an AI data center. Yeah. And Jimmy Trader says, yes, interesting. Tasty has no upcoming earnings listed. Thank you. Fidelity says expected report date, April 22nd, 2026. Perfect. Yeah. I love it. Thank you. This is why I do this, because, we, in these chats, we have like really smart people, and you guys are smart because you understand the downside risk. You understand what we're talking about. And if you don't understand, you're trying to learn. You're trying to go through the steps and say, okay, what are we looking at? Because it takes a little while to understand what is the risk and what are we doing and how can we change it or alter it here. I like that trade. I like that a lot. So thanks, Brian. Thanks for bringing that up. It's good to hear from you. I know you've been hanging around with my stuff for those earning dates were for CLS instead of not Credo. Thank you for clarifying that. I will check to make sure there's no earnings dates on Credo before I put that in. And if you guys if you want to know exactly which trades I'm putting in, if you're not in the chat room, you can head over to the Discord chat. There's a link down below. You can click and you can see like portions of it. You can see some of the results. Definitely check out the AI data picks that Drawbridge has been dropping. It's been crazy. In 2025 did 31% return in just 8 months. So far year to date, the first month we were up 6 and a bit. Today that's pulled back a little bit, but still outperforming the SPY almost 3 times more return than the SPY in the first month. This has been just like typical. Those trades get dropped monthly. So there was new trades yesterday. It's very fresh. Anybody that signs up today gets even better discounts because the price has dropped from yesterday. So the things that I bought, I'm slightly down on. And then if you were considering buying those, then you would be getting them for cheaper than I got them yesterday. And the outperformance has been astronomical, and that has just been so easy, like such an easy style of trading. There's explanation of that on the Discord. You can go there directly, or you can go to Patreon, sign up through that, whichever way you like if you're not a member. And then, of course, my members get access to me every day during the market hours. And then we've got the Thursday chat, which is similar to this, where we do a bit of market analysis, we do a bit of trading, but it has a lot to do with like the adjustments of the current trades that I have on. And I run a whole bunch of like cash secure puts on the weekly. I run diagonals, I run rolling diagonals, zero DTE, whole bunch of stuff. It's pretty fun. So there's lots to that, and I'm going to get back in that chat room now because we've got an hour to go for the market, and I'm going to put on some more trades. Thanks so much, everybody. Let's get rich together, and we'll see you very soon. I'll see my members on Thursday. Thank you. Bye.